So you're a first-time home buyer and you know absolutely nothing about how to get a mortgage, find a home, or anything along those lines. Hi, my name's Scott Hastings. I'm a loan officer in Davidson, North Carolina, which is out right outside Charlotte. And I talk to a lot of people. And what I hear is that nobody answered really some basic questions. Not the real estate agent that they called, or a loan officer, or anybody. So I thought I would just go over what I typically discuss with a first-time homebuyer on our very first conversation. So here it goes. Hey, thanks for calling today. I really appreciate you reaching out. So obviously you're thinking about buying a home. Um, how did you get my number? Oh, okay. So one of my past clients told you to give me a call. Well, I appreciate you reaching out. So the first thing I would say is you've done the right thing by calling a loan officer first. The reason is most people think uh, that they should call a real estate agent first. They've been looking on Zillow or whatever online. They want to buy a house, so of course they call an agent. Well, the reason I know that the best thing to do is call a loan officer first is because the first thing a real estate agent that knows what they're doing is going to do is to ask you, have you been pre-approved for a mortgage? And if you say no, they're going to probably give you the number of somebody that they recommend and worked with a lot in the past, a trusted mortgage advisor. So congratulations, you've done the right thing. So the next thing is, have you thought about what sort of price range of house you want to buy? Okay, so you're thinking about buying maybe a $300,000 house. Okay. Have you thought about a down payment? Do you have money saved up for a down payment? As a first-time home buyer, you could put 3% down on what's called a conventional mortgage, or 3.5% down on what's called an FHA mortgage. And if you're thinking about living in a rural area, then you might be able to get a USDA loan, which is no money down. Of course, that depends on what you make as your annual household income, and it's only good for certain areas. So anyway, are you a veteran? Did you serve in the military? You didn't? Okay. I just wanted to ask because if you were a veteran, then you could use your veterans benefit and put no money down on a VA loan. But anyway, so so it sounds like you have a little bit of money saved up. So on a $300,000 mortgage, that would be about $9,000. And then of course, there'd be closing costs involved, which unless the seller agrees to pay some of your closing costs, you would have to pay those as well. And just a ballpark figure, that's, closing costs are made up of what the attorney or title company charges to close your loan, the cost of an appraisal to find out what the home is worth. You're going to have to pay for title insurance, which the appraisal or title company orders that insures against anything, that happened in the past, to make sure that when you buy the home, the title is free of any encumbrances. You'll also, when you make your mortgage payment each month, you're going to pay a 12th of your annual property tax bill and a 12th of your annual homeowner's insurance bill as part of that mortgage payment. So you've probably heard, or may have heard, principal, interest, tax, and insurance. That's what your monthly mortgage payment's made up of. Well, the tax and insurance portion, that has to be funded at closing. In other words, you have to set up an escrow account. That's where that money sits during the year, so it can be paid by the lender on your behalf at the end of the year. So at closing, part of the closing cost will be about 2 to 3 months of property taxes and a year's worth of homeowner's insurance, plus about a 2 to 3 month cushion. So on a $300,000 loan, that might all add up to $6,000 or $7,000. So you would need $16,000 to close on a home. Okay, so another thing is if you don't have all that money saved up, you are allowed to get a gift. So that can come typically from a family member, but it could also just be an established friendship. And if you are getting conventional loan, which we'll go into that in a little while, then that money doesn't necessarily have to be documented with the donor's bank statement. That's the person that gives you the money. They could just write you a check and you deposit into your account, or they could just wire the money to the title company or a closing attorney. But if it's an FHA loan, then we would have to check the donor's bank account to make sure that they had the money to give you and didn't go out and borrow it, or just have to document all the money. So that's just a kind of a brief overview of some of those basics. What I'm going to ask you to do is to fill out a mortgage application. So I would typically give you a link to my website where you would go, and it's sort of like filling out a profile if you've ever done your taxes online or something like that. It's just going to guide you through questions. It's going to ask you, where you live, your date of birth. It's going to ask your social security number. It's going to require a 2-year history of your residence. So wherever you've lived for the past 2 years, if you've been living with your parents, as an example, then you would just list that, and we would call that rent-free. So that's fine. It's going to ask your work history, where have you worked for the last 2 years? And I would ask that you fill in everywhere that you worked, because we would have to show the W-2s that you've received or 1099s over the last 2 years and match those up on your application. If you've been in school, that's okay, because schooling can count as work history. You would just list, let's say you graduated from University of North Carolina at Charlotte. You would just list UNCC, been there 4 years, and you would always list when you started and when you ended at the jobs or the school, etc. We're going to pull a copy of your credit report. Do you happen to know what your credit score is? So you say that you got it off of like Credit Karma or something like that. Well, that is a good sort of barometer or a good gauge of what your scores might be. But the mortgage company always pulls a different model. So it's a mortgage credit model. It's a different algorithm. So it tends to pull a deeper score. It could be a little bit lower or it could be a little bit higher. It's just hard to say. But generally, if you paid your bills on time and nothing's gone to collections or anything like that, then you probably have pretty good credit. So do you have any student loans? Okay, so you do have a few student loans. Are you currently making payments on those loans? You're not. Okay. Well, anything that shows up on a credit report is going to count into what we call your debt to income ratio. And a student loan is the same. Now, even though you're not required to make any payments on your student loans, we do have to use a percentage of whatever your total balance is. And typically that's going to be 0.5%. So if you have, $10,000 in student loans, then what's that math? $50 a month is what we'd have to count against you as far as your debt. And then if you have a car loan, whatever your car loan is going to be counted in your debt to income ratio, and whatever the minimum payment is on your credit cards and so forth. So we'll take a look at your credit, and also we'll take a look at your income, and we'll figure out, this is how we figure out how much home you qualify for. So in general, you can, with good credit, about 50% of your before tax income can go towards all of your debt. So that would include the new mortgage and then anything like we talked about that shows up on your credit report. And then we would take a look at your income and see, well, what kind of income it is. If you're on a salary, an annual salary, that's pretty easy, fairly straightforward. We just enter that. If you have hourly income, we would use that as well. But if you have any sort of variable income, so if you make commission, if you have overtime, if you get a bonus, then there has to be a certain amount of time that you've been receiving that so we can use it. So for example, if you've got a job, you've only been there a year, you have a salary and you receive commission, we may not be able to use any of the commission because you don't have a 2-year history. But if your last job, you also receive commission, we may be able to use that and average what your commission's been over the last 2 years. It's the same sort of thing with overtime, bonuses, and so forth. We may or may not be able to use it. If you have received like alimony or child support, we have to show that you have been receiving it for a certain amount of time, and we would have to show that you will be receiving it for at least 3 years. So we'll take a look at that as well. If you don't have any money for a down payment, for example, you can't get all the gift, well, there could be a chance that we could do some sort of down payment assistance program, and we could take a look at that. So you say you're living at home with your parents. Well, if you were renting, sometimes people, they have to break their lease or they want to move in at the end of the lease. So a good thing to know is when you close on a mortgage, let's say that you close on a mortgage in March, then your first mortgage payment is not going to be due until May. So you get to skip a month before you have to make a mortgage payment. So you most likely won't be hit with a rent payment and a mortgage payment at the same time. So that's something you probably don't have to worry about. And if you are going to, you will be looking with a real estate agent. I would say just choose carefully and wisely when you find an agent. An agent can be a fantastic resource or a huge liability. You don't want to work with somebody that is not going to ask the right questions, is not going to negotiate well on your behalf. You want to make sure that you order a home inspection, because even though we, the lender, don't use it, that's very important for you to make sure there's nothing wrong with the home before you move in. And if there is, that you have the opportunity to ask the seller to fix these things. So that's a lot of information that we've gone over, but these are all important things to know. So what I will do is send you a link so you can fill out an application, and then I will take a look at it and pull your credit. One thing to remember is that even though lenders don't pass your phone number or any of that personal contact information to the credit bureaus already know who you are. And unfortunately, they sell these as what they call trigger leads, and you might get calls from people trying to sell you a mortgage or things. But very importantly, what you can do is go to optoutprescreen.com. Again, that's optoutprescreen.com if you are thinking about looking for a mortgage. And if you enter your information there, you'll be basically opted out of receiving any solicitations. It takes maybe a month for that to update. So if you haven't done it already, then you might get those calls. But if you're not going to fill out an application for a while, you might want to go ahead and do that. So really save you a lot of headaches. So anyway, those are some of the things that I go over with first-time home buyers on really the first call that we have, and find that answers a lot of their questions. And I also give the opportunity for them to ask me questions along the way. So if you have any questions after watching this video, please put them in the comments below and I'll respond, or you can reach me on my website, mortgagesbyscott.com. If you're looking for a mortgage, I can help you get pre-approved. And if you've enjoyed this video, please make sure to hit like and subscribe. That helps me out a lot. and share it with anybody if you think they would find it beneficial. Thank you.